Welcome to SmallCapSteve Live. We've got a big show today. We're going to be joined by Justin Holland of Eguana Technologies, a stock that I've been in for years. I love the story. I love the name. And I'm so happy that Justin's going to join us. I could probably talk about this name for hours. And hopefully for some of you who are interested in renewables, you're going to get the same excitement that I do. On the news today and on the docket, Sona, they got some good news for shareholders. The stock's up 100% last time I checked. We're going to look into that. Green Thumb Industries just saw the resignation of a director. Novo Resources is looking to uplist on the Toronto Stock Exchange. 2020 ends with around 20 million Americans still on jobless benefits. And heck, I even got an email that I think I'm going to read live. So sit back on this beautiful New Year's Eve and enjoy the show. Let's go. So joining me here today is my sidekick, Jay Lutz. Jay, how you doing?
Oh, I'm fighting an internet connection here by the looks of it. That's going to be the bane of my existence this morning, but that's just how it normally goes.
Small town Saskatchewan living. It's a regular
problem with living in the boonies, right?
It's a regular topic on corner gas, right?
Oh, exactly. Your favorite local Saskatchewan film production.
Mm-hmm. Well, you know what? I've always been a big fan of corner gas. So I think it's a funny show. I enjoy it, and whenever it's on, I tend to check it out. How are our streams working? Let's do that on live TV because we're silly enough to actually be trying to produce this thing ourselves while we go live on the internet. Are we on Twitter? Are we on Facebook? Are we on YouTube?
Guess we'll find out, eh?
Oh,
there we go.
There's Jazzy J. Jazzy J says we are. He says, keep it coming, baby. Oh, I'm going to keep it coming just for you, Jazzy. Keep it coming for you. Okay, so let's get into it here, Jay. Sona Nanotech. They've got
Sona Nanotech, one of the firms we love to discuss between ourselves while keeping our opinions rather contained from the outside world, we'll call it. Mm-hmm. This morning they announced they got their CE mark designation. Basically what it does is it allows them to commercialize their product within the European Union and wherever else accepts that CE designation. They have revealed that they'll now be taking orders that will through to their contract manufacturer in the UK, and they are looking to transfer that tech to a North American manufacturer as well. This is the interesting part to me. This equity, last I looked, is up 101% from $1.30 or $1.10 area to 320s. And I just go back to the discussion that we had right before we went live, Steve, wherein we said, is there going to be a huge margin difference between third-party resellers such as and that is Sona Nanotech? I mean, they still need to get their distribution network up and going. Who knows what kind of sales they're going to see?
I'm speculating here, and again, is this a dead cat bounce opportunity for those who were longing to get out, or is this the beginning of something real? I mean, the stock has reacted really favorably today. I've never, if this company were private, would it have ever been able to receive investment dollars at the public valuations it got to? I mean, I think in the case of most public markets, the answer to that's usually no. But how many companies are going to be coming out with antigen tests or already have them out now across Europe? Do you have any sense of that there, Jay?
I mean, I don't know what's in production lines right now, but I mean, how many different tests are already authorized in Canada by the FDA, by the EU? I mean, months ago this might have been significant. And I mean, look at the chart. This thing hit something like $16, and now that they're ready to commercialize, they're nearing $3. Now, also included in that fall from grace for them is the news that their saliva-based tests, which is really what I think the market was excited over, failed. They had to pull it from Health Canada at.
Yeah.
So I mean,
just sort of looking at it here, I mean, they did manage to put some significant cash on their balance sheet, which does demonstrate that they can do some pretty big things. But you know, I still think that this is one of those names that they were supposed to be first with a saliva-based test, and that was the whole value add for investors, is we're going to be first to market with something that's approved by Health Canada. They pulled that, as I understand it, and now I guess that they're sort of going through that approval process again, and starting out in Europe. So we'll have to see how that ultimately does play out. But it's I don't know. This is a name, like it's one of those ones that we have no position in it, long or short. But I find this wildly fascinating. It's one of the big small cap stories in the Canadian junior markets in 2020, and I'll continue to sort of keep an eye on it. But if I were to speculate here, and someone put a gun to my head saying go long, go short, I would go short here. What are your thoughts?
Yeah, that's pretty well my thoughts. With that saliva test failing, I'm skeptical of where they go from here, in the sense of it's entirely different to work through getting a product approved to go to actual full-scale commercialization. Sure, they got manufacturers in place, but do they have the distribution network in place? There's a lot that needs to happen here before revenues start to come in. And I mean, I'm sure I'll be criticized for that statement, which is fair game. Everyone's entitled to their own opinions. I mean, I'm here for entertainment purposes only, as I say all the time, but that's just my take on it.
Yeah. And to be clear here, you know, there's no reason that this thing can't turn. And suddenly I'm getting a ton of feedback, so it's really hard to talk here. I'm going to put you on mute there, Jordan. There's no reason that they can't continue to move stuff forward with the Health Canada after, you know, taking a step back, looking at, and I don't know the specifics of what happened, but if they can move that forward, or even, you know, announce a big contract in Europe, of course the stock can find more legs, and this could be the start of that. This is venture capital. Everything's tremendously risky, but I'm very much of the mindset that the coronavirus stock plays are, if you haven't hit those big sales contracts now, you're probably in rough shape. Okay, so moving on here. Green Thumb Industries, they just saw the resignation of a director. Jay, what can you tell me about this? And your audio's off. Did you put yourself on mute?
Apologies there. You were getting feedback, so I tossed that button on. So apologies, because I'm going to butcher the hell out of this name. But Green Thumb's director resigned. He came on right after the acquisition of Integral Associates in 2019, back in June. He's a highly experienced executive, absolutely, hands down. He's got tons of experience in the gambling sector, worked with MGM Grand in a number of roles, and he really was impressive to come to the cannabis space. He had built the Essence brand up in, that's essentially how he came to Green Thumb, and a year and a half later, he's departed the firm to pursue gambling licenses again. I mean, fair game to him. Certainly a capable individual, and I mean, personally, I don't really see it as a bad thing for Green Thumb. It's just someone moving on in their own. He's moving back to what he knows best, right? So
let's talk some Green Thumb here. Here's pulling up the most recent. Jordan, I'm going to ask you this on live TV here. Are you listening to me on a speaker, or are you wearing headphones?
Am I listening to you on what, sorry?
A speaker, or do you have headphones in?
Speaker, same thing.
That's
same setup I've done every day. I have no idea what's going on.
Yeah, there's randomly feedback going here, so we're gonna have to figure that out.
I'll go on mute when not talking. Problem solved.
Okay, there we go. That seems to solve it. Okay, so Green Thumb, if we look at this here, I pulled this up beforehand. This is courtesy of Y Charts. We have just the general comps here. Green Thumb's one of the names that I actually really like in the space. If I were to advise people who have a very, very, I shouldn't say very tight risk tolerance, but the people who have the lowest risk tolerance of U.S. cannabis investors, these are probably the names you're looking at. Green Thumbs, Curaleaf, Cresco, Harvest, AYR Strategies, and Trueleaf. Apologies if I missed any, but those are sort of your first tier. I mean, I'm sure we could argue about Harvest. Looking at this from a cash flow standpoint, you can see Trueleaf just busting out here with $107 million in trailing 12 months operating cash flow, and of course GTII $71 million in trailing 12-month cash flow. That's, these are significant numbers, something never seen to us Canadians before. We are entering that spooky land for Canadian investors where cannabis companies can generate positive cash flow. And that's why I think in 2021, you're going to see a lot more hype and a lot more interest in these plays, especially as the regulatory environment changes. There's clearly going to be demand, and it's not just going to be from, non-sophisticated retail investors like what we primarily saw in Canada. Apologies to anybody who was highly invested into those. I don't know what the hell you were thinking, right? Like some of these companies that got to $2-3 billion market caps, that means that you think, if we just go with a 10 times multiple, that means that you think that these things are going to get to, $200-300 million in EBITDA, right? At a 10 times multiple, a lot has to go right. I mean, if you're assuming a 30% EBITDA margin, that means that you think that the company's going to do $1 billion in revenue in selling cannabis in Canada, right? A lot had to go right. And that's just to get to that valuation. Forget about actually, making any kind of return. To our audience out there, are we getting a lag?
No, I think it's largely my computer here. I have no idea what's going on. Hopefully, Canada Post gets me my new computer for Monday morning. But
yeah, okay.
But yeah, so, I mean, U.S. cannabis, we talk about it all the time. We talked about it yesterday with STEM Holdings. It just presents opportunity, unlike Canada. Much larger population, only hurdles solely based on regulatory issues right now. And I mean, if there's a sweep as of next week, we'll find out. I think that could change in a hurry.
Look at Trueleaf here. EBITDA margin 47.4%. I haven't broken down. Are they still under IFRS doing that biological asset gain thing?
Yeah, so I believe changes to GAAP.
It looks like Jordan's cutting out on us there. So they changed to GAAP when?
I believe for year end they'll be changing to GAAP. Either that or for the first quarter of 2021. So, it's coming if it hasn't occurred already.
So it's fair to assume that they, like, I mean, a 47% EBITDA margin is like that's wild.
That's wild in any sector.
This is a stock that will be all the rage in the U.S. once capital starts to flow into those MSOs on the institutional side. Trueleaf, at this stage, if you're picking who's going to be the canopy of U.S. cannabis, it's hard not to look at Trueleaf and assume that that's going to be them, just because of all the operators. they're clearly number one based on just today's performance. And I'd say the number two would probably be Green Thumb. Would you agree with that?
I'll be honest. I don't know a whole lot about Green Thumb. Truly, if they're able to do what they did in Florida in any other jurisdiction, to me, it's game over for the other operators. And I mean, going back to federal legalization south of the border here, I think the biggest case is once these equities get on the NASDAQ and Robinhooders and the like can take a hold of it, I think everyone's neck is just going to break watching these things just go nutty.
Oh God, yeah. Trulieve, in my opinion, will be, what's it trade at now? $40. Trulieve gets on Robinhood, assuming nothing, like there's no disasters to the cap structure that results in this company getting blown up. This will be a $200 stock once it's on Robinhood. To be clear, I don't own any of it. I'm not long. I'm not short. I have no sort of client relationship or anything with Trulieve. I just think that this thing's going to be all the rage with the Robinhooders once they're allowed to uplist to the NYSE or NASDAQ.
Yeah, I completely agree. And I mean, much like you, I'm not long any U.S. cannabis right now. Sorry, I may have shares in like Tinley. I still need them as a multi-state operator, really. But yeah, I think Truly is just going to be wild.
Yeah. Okay. Well, let's move on here. Novo Resources, they've announced that they're going to uplist on the Toronto Stock Exchange. I spent about 10 minutes this morning going through their investor deck and lots of information on it. I wanted to slam my head through the wall because there's no simple slide that just explains what the company does in a paragraph. And here I'm like, oh, yeah, are they an investment company? Are they a producer? Are they an explorer? What the hell are these guys? And that's, that should be front and center on any investor deck, in my opinion, is when I go to it, what are you guys? Give me that mental pillar so that when I start looking through your deck and I start going into the weeds, I know what the big picture is. Anyways, that's a whole side rant. What can you tell me about this news here, Jay?
Cut out on you. So Novo Resources, 2 weeks ago, they announced conditional approval. Now they have received final approval. Monday, they will begin trading on the TSX. That's both their common shares and their warrants. I believe there's about 8 million warrants that trade on the exchange. Offhand, I don't know the strike on that. OTC listing staying the same. Your basic uplisting here. Now, I know Novo does seem to have a following, particularly on CEO.ca. But much like yourself, I don't know a whole lot about them other than they're focused on gold.
Yeah, it's what's the interesting part to me about this is just we're starting to see some more activity with the gold juniors, which I am expecting as a trend. I think that this is gold juniors are waking up from like a 10-year coma where a lot of these companies I talk to, it's like it's like waking up Mike Myers in that scene in Austin Powers where after he's been asleep for like 30 years and he takes like the 2-minute pee. That is calling up a lot of these junior mining CEOs and talking to them about their deals because they're like, what? Who? Investor? Gold stock? CEO? Me? Oh, okay. So look, we're starting to see more activity. That's a good thing. I think that everything that you've seen in the psychedelics in the fall of 2020 is going to start to become a theme in some of the gold junior names, and we're going to see tremendous investment demand. And you're going to see a lot more news releases like this on a go forward basis with some of the better junior mining companies that have real management teams and real assets in 2021. That's one of my predictions for 2021. Thoughts there, Jordan or Jay?
Oh, do you want my endless bull thesis on gold for 2021? Much like cannabis, I think gold will benefit from a Democratic sweep. I don't know what that says about the U.S. currency as a whole, but I foresee enough stimulus that we'll all be celebrating north of the border when our exchange gets lit on fire from all the money flowing into gold, silver, any precious metals, really. I mean, despite the cannabis run, the TSX, the Venture, CSE even, we're still dominated by junior mining. So, I mean, a perfect environment for the junior mining sector as a whole is going to be great for a lot of people.
2020 ends with around 20 million Americans still on jobless benefits. So when I look at this here, this is an article from Zero Hedge. On a positive note here, jobless claims number came out this morning. It declined by 19,000. So only 800,000 Americans filed jobless claims during the week ended December 26th. So I suppose that's a positive thing. But we're still kind of seeing that more stimulus is needed. It looked like they were trying to push through those $2,000 stimulus checks, and then old Mitch McConnell got involved and axed that. What's any take on this, Jay?
I mean, McConnell stopping that was no surprise. The only thing surprising is they seem to have given up on winning Georgia. That is what it is. Things don't look good for the Republicans following that, but who knows? These things are anything's guess. I mean, 4 years ago, I never would have thought that Trump was about to come into office. So I mean, I'm no politics expert in the slightest. But I mean, how many did you say were filed for initial jobless claims?
It was about 800,000, which is still like off the top of my head before coronavirus, that number tended to be somewhere in the 200,000 range. I don't quote me. Well, I mean, you can see it kind of down here, right? Like, January,
what's the
February.
least populous state? Is it something like Wyoming? I swear that they've got only that many people. Like,
oh yeah, the same week last year was 220,000. So,
like, I know we've become numb to these numbers, but I mean, 800,000 people no longer getting a paycheck is wild.
Mm-hmm. Yeah. So let's move forward now with the big main event of the Q&A here. We've got Justin Holland from Eguana Technologies, a name that I've been in for years. I think that 2021 is going to be the big year where they hit their stride. Justin, if you're there, can you hear us?
Hey guys, yeah, I can hear you just fine.
Perfectly, you're coming in perfectly smooth here. Let me get this set up here. Okay. Oops, there we go. Now I want Justin on the big screen. There we go. You can see we're producing our own live show as we go along here, and this is a big get for us. CEO of Eguana Technologies, one of the hottest stories going into 2021.
I think so. It's definitely going to build off 2020, Steve, and 2020 coming through COVID, as you know, and we've had a couple chats in the past. The team delivered beyond expectation versus a lot of companies who didn't have success through that pandemic. So 2021 looks to be lined up much better even than 2020. It's going to be an exciting year. I think you're pretty spot on by saying it will be the breakout year for the company.
Okay, so let's just start off with the basics, something that's always important to me for those who don't know the story. Can you break down Iguana in simple terms for the investors who are new to the story?
I can, and it's becoming easier and easier to do so actually as integrated batteries become more mainstream. And we're seeing that now almost right across the globe. So in simple terms, I think everybody's aware of the move towards greener pastures. What's behind that from where Iguana plays is this grid modernization. And the grid is being modernized with new technology and a lot of renewable technology. There's going to be a critical piece that ties all that together, and it's the integrated battery. And what we do and where a lot of our IP sits is in the power controls that operate integrated batteries. So if you think about having a storage device, any storage device, you have to have an advanced power control system that will move power into and out of that storage device. And our specialty, or our secret sauce, if you will, is the advanced power control that can move that power into and out of the storage unit, whether it's coming from a renewable source, whether it's from the grid, whether it's from a solar panel. We can accept any input and drive that power back out to any export. So we design, we develop, and we manufacture integrated batteries for grid modernization at the residential and small commercial scale.
Okay. So let me get this off. Okay. So we got a lot of questions coming in from the investment communities. Iguana, they've got a very passionate shareholder base who've stuck around this story for 20 years. I guess one of the questions I'd like to lead off with here is, so the company has had some pretty big failures that have sort of led to this sort of unique position in an industry that's just sort of blossoming today. How hard was it to stick it out after? So you were with the company originally. You guys did the power controls for Sonnen, accepted negative gross margins. Well, you watched Sonnen go and get taken out for it was a large number. I don't know if it's ever been publicly disclosed.
I missed the start of that. You froze up there just a moment.
Okay, so let me start off at the beginning. Okay, so there's been some big stumbling blocks over the last 3 or 4 years. We had Sonnen, right? Ended up getting taken out for a tremendous valuation. You guys effectively built the power controls for them. And then you guys did this sort of U-turn. You were going to work with the large automotive company. I'm not sure if that was disclosed or not, as Mercedes. And then Mercedes decided, well, heck, this isn't for us. We don't want to go into home energy storage. And now you're going down your own path. How hard has it been to keep the team together and keep the ship moving forward despite those early struggles?
We have had some false starts, and I think the shareholder base recognizes that. And in fact, we tend to put Mercedes in twice, Steve, not once. So we went through Sonnen and we did develop that product with our BiDirects platform, and we moved over 5,000 systems into the European market with them. However, there was some strategic differences as Sonnen started to move into the U.S. market as to where we thought the focus should go, and we split from that relationship, thinking that we could build a much better global distribution system. That's when we landed Mercedes for the first time, and how we landed Mercedes at that point in time was because of our technology and that technology ownership. So what we are able to do that a lot of our competitors struggle with is build products based on one globalized platform. And what Mercedes was looking for at that time was someone that had the capability to put power controls inside of their chassis or inside of their enclosure, which we had the ability to do. And in under 90 days, we sent them a working prototype. That's how we got engaged with them first go around. They did not launch that product due to some internal issues, actually came back to the company and said, can we just brand your Evolve system? And of course, when Mercedes asks for that, you go down that path. So we actually had two false starts with Mercedes until we started to look at leveraging one thing that we had, I guess, missed how important it was in the early stages, and that was the ability to integrate these systems fully based around company-owned power controls. Once we learned the importance of the integration and how many companies struggled with integrating these systems, we saw a pretty clear path to go down a branded type pathway to move Iguana branded stuff. And that's when we started looking at the U.S. market. All the while in the background, we knew the product was designed originally for these virtual power plant markets, and I'm sure we'll talk about virtual power plants and what they are. But we had a full suite of virtual power plant features in our products, competing against products that were mainly designed for solar self-consumption. So we kept going down that path and built our dealer network, which is doing quite well under Livio Felice's direction with the number of partners. But we knew at some point in time we were going to have partners with the ability to move thousands of systems. And that's when we, worked on and landed the Itochu Corporation as a partner that could wrap financing around our products, and we landed Hanwha Q-Cells out of the Mercedes relationship actually in Europe. Two giant companies who are looking to become energy services companies of the future. So what we were able to do with that integration core competency is focus on the technology and make sure companies like Hanwha and companies like Itochu would be at the forefront of technology. We are working on some new battery chemistry type stuff with some of those companies. And again, obviously in a live forum, I can't go into too much detail on that, but our role with the Itochu Group or Hanwha or some of these larger partners that we're working with is to make sure they have the best technology to become those services companies. So as we went forward through those starts and stops that you mentioned, we continue to zero in on not just the benefit of owning the power controls that we had, but also how important it was to be able to very quickly design, integrate, and importantly certify, which is a big barrier to entry to our space, to go through that process very rapidly, very quickly, where we're putting out new certifications and new products in a matter of months, not a matter of years. And that's how we integrate with the larger players. So to keep the team focused and engaged, I've seen more engagement in a difficult year in 2020 than I have over the past couple of years, because the markets are now coming around to demand types of products and types of features that we built into the Evolve line, the Enduro line, the Elevate line right out of the gate. So the team is excited, and it looks like it's going to be a very good year.
How big is the backlog right now?
The backlog. So we split the backlog between supply contracts. So if you think of our relationship with Hanwha Q-Cells, that's a supply contract. And then we have blanket purchase orders, which tend to cover anywhere from 6 to 9 months, and then immediate purchase orders. So the total backlog right now is around 23 million. Now, if there's some shareholders, some listeners out there that said, well, was that 23 million when we had the annual general meeting in October? The good news is we've shipped, a number of products since that time, but we're still at 23 million. So our order book ratio to shipments is still sitting about 1-to-1, which is exactly where you want to be. So we want to maintain kind of around that 20 plus million in orders while we continue to ship that backlog through the process.
Putting on my analyst hat a little bit here, does that mean that sort of on a go forward basis, if you're shooting for that 1-to-1, that the backlog will often look like the annual revenue figure? Is that kind of what 1-to-1 means?
It's a tricky question, but yeah, you can say that.
Or a run rate.
Yeah, we expect to see more growth this year. Basically, what the thing to keep in mind is that our order book backlog currently doesn't include any of the larger opportunities with the Itochu Corporation. We are currently in trials with them right now. They're going well, but they're going to take their time and make sure they get that right. If you look at what their game plan is, and I'll forward you some backup information for the shareholder, Steve, that you can get to them. They're looking at targeting about 80,000 homes in the U.S. over the next 5 years. Now, 80,000 homes, and just for simple math, and obviously the margins and the pricing ranges depending on the product that we're working with, that's about 800 million over that time span should Itochu deliver that range. And what we want people to start to look at is that's where you're really going to see the company move thousands upon thousands of units, where we're moving hundreds of units through our dealer network. That's why we have the two-pronged approach. And we're starting to see more and more activity with the Itochu Group as we go forward, and we do expect to start to see some rollouts later this year. So they're massive numbers. It is infrastructure. Infrastructure does take a long time, and I can tell the shareholders we've been fostering the relationship with Itochu for now over 6 years to get them to integrate on our supply side and our demand side. So they're looking at starting to roll out now, and it's going to make a very exciting second half if they hit their stride.
So they're looking at doing, you said 80,000 batteries to start with a virtual power plant. How big of a partner do you think Iguana stands to be in that equation?
Currently, we're the only, and the 80,000 is specific to the U.S. market. I should state that. And when you think of companies the size of Itochu, and I would encourage, our listeners or the shareholders to take a look at the annual report that they put out. They do note the importance of the Iguana investment in the annual report, but that 80,000 is specific to the United States market. So they are looking very aggressively into the Australian market. They're looking at certain Middle East regions as well. They're a massive conglomerate, and they're going to be a big part of our future. But the 80,000 specific to the U.S. market, and in our view, is that all of it will be with the Moitsa-based Evolve.
And that's at like $10,000 a battery on average, give or take.
Give or take.
And I know you hate me saying battery. You prefer the term energy storage system.
Energy storage system works, but if we want to call it a battery, I think that's becoming the commonplace name. So battery is certainly 58% of the cost of that good. So if you want to call it a battery, go ahead. We'll stick with the energy storage solution.
Okay, so for those doing the math at home, that's 10,000 times 80,000 works out to, I'm trying to do the math in my head here, 800 million?
That's my math.
So what's, like, that's a massive revenue number for a tiny small cap company. Obviously, this is a forward-looking basis. We don't know if you're actually going to get that. That's sort of that blue sky scenario. But this is sort of why Itochu got involved. Is their big picture is and how do they make money off of setting this whole thing up and not actually owning the battery solution themselves?
So they've got a fantastic model, and you would expect that coming out of a company like Itochu, but they're involved in vertically integrated through the supply chain with renewable energy right down to the mining of the metals. They're a key supplier to some of the larger battery manufacturers out there, so they're engaged at that level. Then they're engaged on the software side. As many of our shareholders know, they are invested in a company called Moitsa out of the UK, which has developed state-of-the-art AI as it relates to home energy. They've put over 30,000 Moitsa systems into the Japanese market already. That's the AI that we integrated for them into our Evolve platform. So they have skin in the game at the mining level, at the battery level, at the energy management software system level, and now with the investment in Iguana at the hardware level as well. Further to that, if you think about where they're headed, they're looking to be an energy services based company. So they'll actually provide financing for some of these systems, so they'll be able to make revenue streams there. But then they'll also be able to sell the features and the services back to regulators and utilities and operators and so on, and be able to make revenue there. So they'll have revenue streams coming in through the vertically integrated supply chain, and we're happy to be a big part of the success that they're going to have.
So I'm going to try to explain this to somebody who clearly doesn't have the technical background to be explaining this. So the idea is that, for example, load balancing, would that be something that that they could make money off of by deploying the virtual power plants?
It is, and some of the key ones are you can regulate voltage on the grid, you can utilize aggregated batteries as spinning reserve. This is the simplest one we use to explain it to people. If you think about, in the California market, you've got a really warm day, everyone starts to fire up their air conditioners, you're going to fire up a coal plant or a nuclear plant or some form of generating station. In the future, you're going to have all that energy sitting in these aggregated batteries that the operators and the regulators can pull out of instantaneously to provide that energy to the load or the home putting on the air conditioner. So you've got right from spinning reserve, you've got load balancing, you've got time shifting, where you can generate the power, put it into the aggregated batteries or the virtual power plant, if you will, and then pull that out when it's needed at a later point in time. Those are the standard features that we see through VPP. What happens is you can generate a revenue stream relative to each battery in the virtual power plant, and that's where VPPs are actually headed.
Okay, let's. Here's a. I'm going to try throwing out a random question to you from YouTube. This might be a little bit too far into the weeds, so if you can't comment on this, I understand. Let's try this. Claudio Rene asks, getting into Sonnen Mercedes Q cells is impressive. I'm a little concerned that the exit of CSO Marcus Brunner weakened your business development team, though. Any comment?
I won't go too deep into that. Certainly, we changed the structure of the GmbH, Iguana GmbH, when we landed the Q Cells deal. Marcus's strong point was building distribution channels. One of the key reasons that we had brought Marcus on the team was distribution channels in the European market and to oversee globally the sales team. We landed with almost the best distribution channel you could possibly get across the European market with Q Cells, with bringing to the table over 1,100 dealer partners, and that was what Marcus was tasked to do. Certainly, he remains close to the company, so there's no ill will between Marcus and the company. No one knows where the future will go. But the strength that he brings, and I'm sure whatever company Marcus is in that needs distribution capability, he's definitely one of the best. But we kind of got a gift wrap distribution channel in the Q Cells deal. And then we needed to focus more on the after-sales service aspect of the business for that. We don't think it's weakened our business development team at all. The key market after the European market was the U.S. market, and like bringing on, we brought on Dr. Ruckerman and Marcus Brunner in Europe, but we brought on Livio Felice in the U.S. market, who was responsible for building both the Sonnen and the Mercedes-Benz distribution channels in the U.S. market. And as we got the gift-wrapped distribution channel through Q Cells, Livio's put a team together focusing mainly on California, where we think the big piece will be, as we go forward 2021, 2022. And he's taken us from a couple of dozen partners in the U.S. To over 200 in less than a year. So we think that bringing the entirety of the Mercedes-Benz team on and having them focus on their specialties was the right way to go. And we've checked the box on Marcus's specialty in Europe with Q Cells, and Livio continues to build the channels in the U.S. market. So we think the team is it's getting stronger. We're adding to that team almost quarterly at this point, and we'll continue to do so as we move forward.
So I assume that the solar market, installer market in the U.S., for example, is very fragmented, and so it's a lot of mom and pop installers, because at the end of the day, it's labor, right? Getting people on top of roofs to install solar panels. How hard is it to train these mom and pop installers to install an Iguana battery?
It's critical. It's absolutely critical. And one thing that you want to do to set yourself apart from the competition is you want to simplify that installation process. And some of the big things that the installers want to do is install in less than half a day. That's key for them, and they don't want to go back to a house that they've already been to. So one of the things that Iguana did, and this was through the business development and the team that Livio has, is we built the Iguana certified training programs for installation and for product knowledge. So we try to give the installer base almost a white glove type treatment so that we can get them into and out of houses faster. The other thing that we put in there is the ability to remotely commission systems. Again, if you're an installer, your game plan is to make money. How do you make money? Multiple houses per day. So if you can install multiple Evols versus a single competitor product, you're going to show brand loyalty to the one that allows you to make more money. So we spent a lot of upfront time training our installer base ahead of time so that installations do go smooth. It's such a key factor in our space. When we design the Enduro product for the European market, we actually task our development team to say, we want this product to be installed in less than an hour with one man and no tools. Now, they're obviously going to have tools, but the game plan was get as close to that as you can. And the average install time from the hardware perspective that we see on an Enduro is 30 to 45 minutes. So think about the installer who wants to do multiple homes a day, simplifying that installation process. We didn't want to do truck rolls like a lot of our competitors do, which is install it, then go back and fix it. So we simplified the installation process. We built a training program to certify the installers, and we have the ability to remotely commission and remotely analyze the system after it's installed so that we can keep an eye on things and correct from a remote location.
Mm-hmm. What I find so interesting here is a lot of the questions we're getting from the audience and the Iguana shareholder base, they're always so specific. And I've never seen a company like this where it's just like 5-6 years of news releases and, like questions like who's Ampere Energy? What's the deal with Passan? Are you still involved with them? We got a question here from Val O'Flynn. She asks, how is the Ontario Electra Drive for the workplace EV charging project going? Have all 16 stations been set up? Are they using the Elevate in that project? What about the website update? So you can see, and everybody's really excited about the new website. So it must be pretty well known that you guys have a new website coming along. Can you speak to some of these sort of, like, there was one company, I think that they were out of Pittsburgh that you guys were doing batteries with that was using salt water for batteries. That's off the top of my head. Can you speak to some of these former partnerships, where they are, if any of them are still going? Any color on any of this?
Yeah, sure. Absolutely. The one that you're thinking of with the salt water is a company called Eguana, and I think they went into receivership. I think they were bought by a Swiss group. A lot of those partnerships, when we looked, came out of the early transition of the company from solar PV into energy storage. And one of the big selling points that we had when we were looking at Iguana Inside or that type of a model was that we have an open control software platform. And a lot of the IP that we have sits in the actual software inside those power controls. And you hear a lot of people out there talking about being agnostic to battery technology, agnostic to the EMS or the energy management system. And we wanted to demonstrate that. So we integrated with as many different battery chemistries as possible back in kind of 2014, 2015. And I'm guessing that would be about the time frame of the partners that you just mentioned. And we integrated the Eguana. The saltwater company was a Gates-backed company. There was also one called Ambry, which was liquid metal, same type of thing, where they needed very specialized power controls and power control software to integrate with. So we did all those things. There's been many changes with some of those companies. I'll give you an example. We were looking at some fairly significant opportunities with a company called Primus Power. Primus Power ended up going more towards larger systems, which our technology is geared currently towards smaller systems in that 5 to 10 or 15 kilowatt area. I think Primus right now product is at 20 kilowatts and above. So they still utilize the technology in testing. However, they've gone to bigger systems. Same thing with, we worked with a company called Green Charge Networks in the past, a company called STEM in the past. They also drifted towards much larger type systems. We stayed focused on the residential segment. We thought that would be a bigger segment to play in. As you go up in system size, what we noticed was you start to lose the ability to mass adopt, and you start getting into more engineering project management. Takes a lot longer. The sales cycle's a lot longer. There's a lot more red tape, if you will, depending on which market you're in. But a lot more hurdles to cross on larger system installations versus cookie cutter mass adoption that we're seeing in the residential. We thought that the virtual power plants, which will be designed based on residential installations, would be what really moved this segment forward. So we've stayed focused on that. We still interact with some of those companies from time to time. Ampere Energy, I think another one you mentioned, we actually were a finalist for an award with Ampere a number of years ago.
I got to show a picture of this. This was really interesting. This was for the European market. And they came up with let me see if I can find a picture of this. This was they had a battery that was supposed to be like a coffee table. Here, look at that. Your home battery would double as a coffee table. I guess in Europe, where people have sort of smaller spaces and they're trying to optimize what they have. I guess that's a big difference between Europe and North America in terms of residential storage.
I see on the screen, Steve, the picture that we all noted internally with the baby crawling on the battery, which we found interesting at the time. But again, think back to what ownership of the power controls. So Ampere Energy went out and canvassed all the companies that were in the space, and they said the same thing that Mercedes-Benz said to Iguana. Can you put your power controls into this enclosure, which you just had it on the screen. It was a crazy enclosure at the time. And our answer was, of course we can. And if you think about, some of the simpler ways to talk about the technology, I'm sure my engineers will cringe at this, but if you think about it from a Lego standpoint, well, we can move the Legos around much faster and much easier than any of our competitors. So when someone brings a specialized enclosure to us, it's not that difficult for us to integrate with. And because of the open control software, and again, where most of the IP sits, we can go very, very quickly into a sphere, into a small Mercedes enclosure, into larger enclosures. So the reason that we did that integration with Ampere was, A, they wanted to have that sphere ready for the major shows in Europe, which we were able to help them with. But over about 18 months post that show, they did go through a lot of restructuring. They were not moving product. They weren't looking to move product. And that's something that we were looking to build on. We're channel partners that would move products now through our dealer network. But certainly the team would remember that Ampere Energy very well.
Okay. So another question we're getting is about what's the expectations with Q cells going into 2021?
The expectation is we're going to see growth with Q cells in 2021, and it's a big operation, and they're number one for a reason. And they went to number one in solar PV in about 3 years, which is very, very impressive. We have put some systems in, there's a few hundred operational now. They have come back to the company with a number of feature requests, which we've gone through and we put those features into the product. The game plan of year one was to get the best product for the Q Home package, which I think we have at this point. And I expect to see a fairly significant ramp going forward. as their sales team, which, as you can imagine, is very extensive, is now trained on the product. The other thing that Qcells did coming out of the gate was we looked at kind of Germany and local markets around Germany, where they immediately expanded into Ireland, into the UK, into France, into Scandinavia. Those drove some certifications. We had to go through and certify for all those markets. We've now got all that done. We did transition that product into our manufacturing partner, Jabil. Reason being, again, think of capacity. When you start moving thousands of systems, we wanted to make sure we had a manufacturing partner that could ramp up and scale at the same speed that Qcells can ramp up and scale. So we finished all of that work. And then, of course, there's an NMC battery in there. Itochu now controls our NMC battery supply chain. We wanted to eliminate those battery module availability risks. So we've got Itochu on the supply side of the business. So in preparation for Qcells ramping up, we had to transition manufacturing to Jabil. We had to bring in a much larger balance sheet to manage the LGC or the LG Chem relationship and get all those pieces in play. We had to get the entire Qcells team trained, which is we've now done, and now we expect to see some pretty significant takeoff from that perspective.
Are there any new battery technologies out there that, because my understanding is your power controls, your whole system it's agnostic. I mean, if you can create a battery, you guys can find a way to hook it up to the grid. Are there any new technologies that you guys are looking at?
Not that I want to be coy, but the answer is yes. And yes, we are looking at some new technology. We do expect to see some semi-solid state lithium technology come out as kind of the next generation battery. We are working with some groups on that currently. So we will be staying at the forefront. And again, as I mentioned, our core competency is not to engage at the consumer level and try and move products in that fashion. Our core competency is to make sure our large partners and our dealer network partners have cutting edge technology. So we'll stay at the forefront of the battery chemistry changes, obviously working with a group like Itochu who is driving a lot of that change. We do have very early access to some of the new chemistries that are coming out, and we will work with and integrate those new technologies into our platforms for them.
So Itochu, they're kind of incentivized that anything, because I'm sure Itochu sees even more deal flow than you guys do. They're kind of incentivized to anything they're looking at now, they're likely to call you guys up and ask your thoughts on it. Would that be fair?
I think they look at us as, as the integrated battery side of what they're doing. And they've got a partner in the Japanese market called NF, which they've got a joint venture with. We're looking at working with them as well. But you're absolutely right. We're happy that they lean on our development team. We've got a fantastic group that's led by Dalgitas. Some of the shareholders would recognize the name. But if you look down across the development team's accomplishments over the last couple of years with the number of products that they've certified in a number of regions, it's quite stunning given the size of the company. But that is how Itochu looks at us, and they're leaning on us to make sure that they have cost competitive products that are feature rich. They also recognize that the battery technology currently sits as the single highest price subcomponent in the integrated solution. So if they can, through the supply side or their vertically integrated supply chain, give access to Iguana to next gen technology early, then we can in turn spin that around and get products certified for them faster and give them an edge out in the market as they start to roll out these large virtual power plants.
What about those in Canada that are looking to install and evolve? Is that even a possibility yet?
Yeah, it's certified across North America. I mean, there's not a lot of focus in Canada. We're not seeing a lot of movement. We have engaged with different utilities. We've done some EV infrastructure work, but we just didn't see that as a big revenue generator. We do want to take the company profitable, obviously, as quickly as we can. We are targeting 2021 to do that. So we tend to focus more on markets where we see, more policy-friendly type movements, and we see, much further ahead, like a Germany, like a Japan, where they're kind of in that second to third phase of grid modernization, where you're going to see, over 250,000 systems installed versus, the ones, the twos, the fives, and so on. We think it would be great if Canada kind of got more engaged on energy infrastructure and started to go down that path. We would certainly play a key role in that. But right now, we see other markets like Hawaii, like California, like Australia, that are much more progressive on energy infrastructure right now than what we see in Canada. So we focus the efforts on markets where we think there will be a faster and a larger return.
Have you seen any increased activity as a result of the incoming President Biden?
Not yet, but we're expecting that, and that's pretty exciting. And I mean, one of the things that people who follow renewables would certainly see is that notwithstanding Kamala Harris grew up in Montreal, so there is a bit of a Canadian connection there. But she's from California, and California, one of the largest economies in the world. We think that they're going to focus heavy on California almost immediately, and that's going to benefit the renewable sector right away. So we haven't seen policy change yet. We expect we'll see it very quickly, and it should really open up the floodgates for the U.S. market. And one thing to keep in mind, the U.S. market has always been considered as the market that will be the largest market when they flip the switch. Obviously, the switch was not going to get flipped by a Republican administration, but they didn't slow it down either, which was good. My personal view is that was related to jobs, not so much renewables. But the incoming administration will be renewables focused, and we think that they will open those floodgates, and we'll finally see that U.S. market transition to one of the largest markets in the world, which is where it should be.
Okay, so something that I want to ask you about is, and we'll wrap it up here shortly, but Elon Musk comes out. I think that this might have been, I don't know, off the top of my head, 2014, and announces the Tesla Powerwall. You guys are already working on home batteries with Sonnen. What's going through your guys' head at that time? Did you guys know that this was coming? And ultimately, how did you guys view it at the time versus into today?
We did know at the time, and in fact, I believe that NDA is passed, but we knew exactly. It was a good point of self-reflection, and I'll tell you why. We went out with a strategy of having a DC coupled system a DC coupled system whereby we said, if you focus on software-driven power controls, you can select any battery that you want. And we thought we had the right pitch. And Tesla comes out and says, at that time with Powerwall 1, an AC coupled system, so a different setup than what we had, and said, focus on the battery, because they had to deal with the Panasonic battery. Focus on the battery and use whatever power controls you want. So Powerwall 1 was exactly the opposite strategy to the strategy that Iguana had. So that obviously we sat back and took a look at it, and we stayed the course. We thought we had it right. Power controls, especially advanced software-driven controls that we have, we thought if that was the centerpiece, you could then use whatever battery technology you want. Fast forward 18 to 24 months from the time Powerwall 1 came out, and Tesla completely reversed their strategy to say, if you don't have control of the advanced power electronics, you're simply not going to win, and use whatever battery you want. And they flipped that power wall from an AC or DC coupled to an AC coupled, which matched our system. And then we thought, okay, we had it right. AC coupling is the way to go. And DC coupling, which a lot of engineers, if there's any engineers listening, would tell you is looks like a more elegant system on paper. However, you do have to add a number of step up, step down conversion processes in a DC setup. And on the AC setup, you don't have to. So that was one of the reasons we went AC side. The second reason we went AC side was we saw microinverters taking over a very large part of the residential PV markets in the US, and we wanted to make sure that we had a product that would easily integrate with those microinverters. So that's another reason why we stuck to the AC side. So when Tesla flipped from a DC coupled system to an AC coupled system, they flipped the narrative to say, focus on the power controls, not on the battery. You'll be able to use whatever battery chemistry you want. Then we thought, okay, we've got it right. And then, we really wanted Tesla to scream at the top of their lungs, this is going to be a big market, knowing that they had the same strategic view we did on product makeup, on the AC coupling side, not the DC side, the ability to integrate well with microinverters as well as string inverters. And once those two things matched, we felt a lot better about the strategy that we had put together. But your point's well taken. It did cause us to hit the pause button and question whether or not we did go down the right path. And the reason we question that, I should note, is because our technology can be set up on a DC coupled system as easily as an AC coupled system. So that was a distinct choice that we had to make. Do we want to be an AC coupled system or a DC coupled system? So when they came out as a DC coupled, we thought, do we have it right? They flipped about a year and a half into to focus on the advanced power controls, which obviously made us feel a lot better. And now the two strategies from a product standpoint are very well matched.
The big difference between AC and DC is the ability to, is it auto recovery, where if the battery goes down, you're able to fix it remotely? Is it backup power? What's the big difference between AC and DC coupled?
So the big difference is on an AC coupled system, you can install it with a microinverter setup on the PV side. On a DC system, you can't. So we thought if you go on down DC coupling, you're going to lose 40 to 50% of the available residential market coming out of the gate. The other thing that the AC coupled system allows you to do is it allows you to easily retrofit existing solar systems, which we thought would be an adder to the marketplace when early feed-in tariff contracts ended, much like what we're starting to see right now in Germany. So we wanted to have a product that was easily retrofittable to existing solar installations. That's the AC coupled system. And we also wanted to make sure we had a system that played very nicely with microinverters, which was about 50% at the time of the US residential solar market.
Okay, so I guess one of my last questions, I'll give Jay a second to ask one too, but for investors looking into 2021, what's the big catalyst that they should be judging you guys based on? If we're having this conversation on New Year's Eve 2021, how should investors judge the management team's execution here?
They should really look at the growth of the company. And we've positioned the company a number of times for breakout years. You mentioned some of the pitfalls that we had. Over the last few years, the major pitfall that we had to work around, two phases. One was battery module availability, and two was scalability. So from battery module availability, we were sole sourced. If that partner was out of stock, we were shut down. And we built momentum. We had a very nice order book, and then we were out of product for 4 or 5 months. That hurts a small company like ours. So we immediately went out and integrated a secondary source. So now we have the cobalt-free chemistry as well as the NMC, and we're also working on new battery technology. So we want to have a multi-pronged approach to battery module availability to de-risk the availability of our product, which is the full solution. That's one thing. The second thing was scalability. And one of the questions I typically get is, you've gone from $250,000 quarters to $1 million, and you've gone from $1 million to $2 million. But how do you get to a 10 million plus quarter, and can you consistently deliver that? So we put a lot of focus onto managing the scalability through Jabil. We've got partnerships with some of our circuit board manufacturers and de-risking that battery module supply chain. That puts the company in position to be able to do a 10, a 12, a $15 million quarter, which we're looking to do in 2021. So I think the measuring stick for the company now is, do we have the marketplace to take this company profitable? We believe we do. Do we have the distribution channel set up currently? And we believe we do. Have we diversified the battery availability to make sure we don't get stopped? And we believe we've done that. So scalability, battery module diversification combined gives the company the ability now to significantly increase monthly shipments and start to look at much larger quarters.
So you're probably going to hate me for asking this, but I'm going to ask you anyways. We have this conversation New Year's Eve, 2021. Do you hit a $12 million revenue quarter in the new year?
I think we do. And here's how we look at that. We've got the orders in place. We've got the partners in place. We spent the last 8 months working on the supply chain, working on the operation, working with, we worked a lot with Export Development Canada. We've got them in position now with multiple manufacturing partners. But I do think the biggest piece will be the transition in the support of Itochu on the NMC battery module. The support that we get on the LFP module, which is very, very similar to the Itochu setup, allows us to make sure we've got that supply to ship those finalized products. So we're targeting that certainly to see that this year, and I've got confidence in the team that they'll deliver that result.
Steve's putting me on the spot here, and he pretty well took my question. My main focus was one, the whole cobalt-free and the connection to, the relevance to where Tesla sits on that, as well as what you view as being the most underappreciated aspect of the company. But I think Steve stole my thunder on both of those questions effectively.
Okay, well, just quickly on the cobalt free, I mean, we went down that path because we saw better availability, and the cobalt free outside of China right now is not very well integrated into the electric vehicle market. And with that electric vehicle market continuing to grow, we wanted to have a source of module availability that did not compete with that sector. So that's one of the reasons we went down that path, and we're happy that we did. The other thing that you'll see coming out of the company is a full home backup cobalt-free product that we're looking to launch in the spring. And the reason that we've done that is because the California market specifically right now is splitting into two sides, a smaller 5 kilowatt product segment and a larger 10 kilowatt product segment. And we wanted to make sure we could hit both those segments. So the game plan, and one of the reasons why we wanted to expedite the development of that cobalt-free product, was to have multiple cobalt-free products in the marketplace before the competitors started to bring out their first iteration of that. We do think we're ahead of the game. We will have multiple products in the marketplace by mid-2021. We are a little bit ahead of schedule right now on the development of the 10 kilowatt product, and I expect the team will continue to stay ahead of schedule there. But that's one of the reasons we went down that that pathway. Unfortunately, Steve, I just want to get back to, because I get this question sent to me quite a bit. One of the things that we did relative to the website development is we did prioritize some of the product development ahead of that, and we had originally planned on launching that website about 6 weeks ago. And just as we post this, because I know some of the shareholders will pick this up, we have finished now all of the internal structures of the website. We just have to fill in some of the content. So we've got a lot of work done. We did pause it briefly to launch the development of the 10 kilowatt system, which I think was the right prioritization given what's happening in the California market. But we are looking to launch that within the month of January, likely the third or the fourth week. So we've got some content to fill in still. I think that for the long-term shareholders, it's going to be a pretty significant change. We did just put the investor presentation up on the current website. I'd encourage people to have a look at that. It does have some of the new branding on it. We did want to give some of the shareholders kind of a taste of what was coming down the pipeline, so they can see that there. But the website is, structures are done. We've got some content to fill in, and we're looking to get that done within the next 3 to 4 weeks. But it was prioritized behind the product development. I know that's a question that gets sent to me a lot, so I wanted to make sure we put that off today.
Here's a question that just got forwarded to me from a sophisticated investor I know. He asks, how much working capital are you going to need to pull off a $10, $12 million revenue quarter?
That's a really good question. And one of the things that we've changed quite considerably is the working capital needs of the company. And when I talked earlier about the ability to scale and why we think we will hit a plus $10 million quarter, it's because of the working capital changes that we've made. So, for instance, to do $1 million in a quarterly revenue in the past, the company needed about $850,000, or about 85%, to deliver that million. Today, to deliver that million, the company needs around 100,000, so around 10% of that. And the reason being is the support that we get on the battery side from Itochu, as well as the support we get from the Jabil EDC combination. So we don't have to front the working capital 120 to 130 days in advance of shipping the final good. We actually, in most markets that we're in, can take the product right through to delivery with only putting about 10% on the table. That's one of the fundamental changes that we focused on second half of 2020, was making sure we were able to scale without the need to run at that 80 to 85% working capital requirement. So it's a very good question. And one of the fundamental changes that we've made in the company over the last 6 to 8 months to position us for the scale, for Q cells, for Itochu when they start to get rolling out, and so on.
So a question for Jay's going to have a laugh at this with some of the names he's going to think of when I mention this, but one of the big lies told in the cannabis sector was, we're going to convert our convertible debt financing with standard bank financing, which that was never going to happen. But in your case, if you guys have a virtual power plant opportunity in front of you, I would assume that there's going to be standard bank financing options start to open up to you guys. Is that something you guys are looking into yet?
Well, you keep in mind the partnerships that we have. So on virtual power plants, Itochu will finance those. So, de facto, we have financing available and in place currently. That's how the U.S., 80,000 household target, that's where that comes from. We are looking at bank financing going forward. We do expect to get in 2021 more of your traditional or standard type revolving structure. But on VPP rollouts and these types of things, we have financing available to us currently through the Itochu relationship.
Okay, perfect. I think that pretty much will wrap it up for today. Justin, thanks so much for taking the time to join us. I know for a lot of shareholders, this was probably a pretty fun watch, and they're going to go through this with a fine-tooth comb, and it's going to bring up lots more questions, and hopefully you'll come on more regularly and do this with us, because I love the story and love following it.
I think it's a great platform. We've been trying to find a platform where we could engage more with the shareholders outside of that traditional press release. When's the next press release? There's so many little things going on that you're not going to put out in a press release, and we want the shareholders to have access to that information. The other thing I would say is we're getting a lot more predictability now and what's going to happen quarter over quarter. And when you get that predictability, it does allow you to open up and engage a lot more frequently with the shareholders. I think this is a fantastic forum. I'm happy to come back as many times as you'll have me, and make sure that we keep the shareholder base, make sure they're getting the information that they want and questions answered, so they know that the company's working very hard on their behalf.
Okay, well, perfect. Thanks so much. So Jordan, or Jay, I keep calling you Jordan. That's because I don't know how many people in your life actually call you Jordan or call you Jay. but now we're on this show. I'm like, I better knock it off with all this Jordan business, because your online persona is Jay. What's your big plans tonight? What's Jay Lutz doing on New Year's Eve going into 2021? Please don't tell me you're going to be on CEDAR.
First and foremost, I need to digest the interview we just had. Great to have Justin on. I'm always amazed by some of the shareholder bases we encounter.
I've never seen anything like this.
I'm reading some of these questions that are popping up, and I'll admit I'm lost in the weeds, and that's only because I don't know the story to the level that you do, Steve. And I mean, that's largely why you ran this interview today. It was just because you know it so well, you know it inside and out. And I mean, clearly a lot of shareholders do as well, based on the questions we were getting. They are so technical, there's no insight I could even provide.
One of the things I like about this, right? My cousin is I'd say that he's relatively affluent, and he is an engineer. He's a mechanical engineer, I believe, or he might be electric. No, he's mechanical. But he's a shareholder, and he's the kind of guy who, if I passed him a microcap deal that it was anything technical, it would either get past the smell test or it wouldn't. And he likes it. And apparently, from what I've been told from some of the investors who have made introductions to the company on sort of that banking side, when they get like an engineering background type investor or analyst on the phone, and then they get the founder, Brent Harris, on, it's just a massive nerd fest. Kind of like when we get on the phone with the cannabis CEO and just start talking about the poor people who sometimes get dragged into these conversations,
I know
the boring bullshit we'll talk about.
But yeah, I mean, today's interview was great. I missed the first bit of it.
We're still getting through this.
Yeah, internet issues, whatever. I
like this platform. I think it's good. It's going to take some work, and we got to get more comfortable while flipping around videos and trying to talk and be engaging and trying to serve our audience, which that's important to us. We don't want to just have companies who have had advertising relationships with us in the past on the deep dive. Any company you guys want on here, any astute micro-cap investor that you think has interesting things to say that can, help serve the audience, we're all for that. So let us know.
Even if you're an exec of a company yourself, give us a reach out. My email is j@thedeepdive.ca. Either that, Twitter, Facebook, Instagram, any avenue you like. We want to have interesting people on here. At the end of the day, we're here to serve the viewer, not ourselves, and that's really what we're after, right? So, absolutely, always open.
Yeah. So I had some emails I was going to read. This has gone on too long. I'll get into that on Monday, perhaps. But I'd just like to say Happy New Year to everybody who watched. We appreciate everybody who took the time to watch this. Hopefully they found this to be helpful if they were interested in the story or have never heard of it. And now they've got all this sort of maybe a little bit too much focus today. But I think that, for those of us who like to invest in microcap and small caps that are looking for companies that aren't just, promotes and those work too. Look, I mean, in 2021, going into 2021, I think that the small cap investors kind of learned that not every company has to be flawless, but you want the right sector tailwinds, the right news flow, the right share structure, and the right visibility / promotion on a stock. And you could see great things happen. And we just saw it in the psychedelic sector all over the place. And that can make sense for a trade as long as you know what you own. But personally, I'm still a romantic about micro caps. I want to chase those Expel technologies, which could run from 6 cents to over $50. And anybody, there's one guy who makes a bunch of videos about stocks, and he gets on there, and you guys probably be able to figure out who he is, but he gets on camera and he says things like, "I'm gonna find the next 100 beggar. Why find 10 beggars when you can find 100 beggars?" And it's just like, for anybody who invests in small cap, especially for an open market retail investor, that's just so stupid. It's just a stupid thing to say. You're going to find the next 100 beggar. Why find 10 beggars when you can find 100 beggars? I've been investing in small cap open market for 20 years. You know how often I find 10 beggars? I find them. I found a few this year, but when I find them, I'm pretty fucking happy. They don't just grow on trees, especially in a sideways market. Right now, the market's pretty good, but you find 100 bagger, nah, those just, they're out there. They're out there. But if someone's touting that he has one on a paid promotion on a video, you're probably not looking at it because they probably handed away a bunch of the paper that could have given you that lift. But I'm a romantic about micro caps. And one thing I really want to get into in the new year is kind of looking at those expels that go from 6 cents to $50 and sort of what were the characteristics that were there? What are the things that microcap investors can identify early stage that can lead to those things? Now, obviously, the investment climate was different when that stock did its thing. There's Monster Energy's one that people like to bring up too. But I believe that those are out there. They're not that easy to find. They require proper diligence, proper screening, and a hell of a lot of conviction, but they are out there. And that's one thing that I'd love for us to explore in 2021 as we look at opportunities and look at equity and talk equity analysis. What's the screening criteria? What's required given certain macroeconomic environments, all those sorts of things. Jay, you got any parting shots for us going into the new year?
Parting shots is, as always, thank you everyone for your support. We are entertainment purposes only. Opinions, I have zero licenses in relation to markets, at least. Steve's the same. On top of that, lots of good content going out this weekend. We've got a couple pieces by Jim McFadden going out.
Who's had a hot hand this year? Holy, this guy has picked some. And I personally axed some of his pieces. And I'm like, nah, because we put that out. People are gonna and then the next thing we know, I look back 3 months later. It's like, okay, that stock's up like 300-400%. So
you know what?
Jim carte blanche now. Just write what you want and bring them out there. These aren't clients or advertising or anything. We just say, Jim, we're going to pay you a salary. Go pick some stocks for our audience. And he's picked some tremendous winners this year.
Yeah, maybe what I'll do is I'll post a couple of them, and the initial writing date and why SmallCapSteve decided to axe them, or why myself decided to axe them, just so we can show that he's got talent and maybe we don't.
So my issue with a bunch of these is I look at them and I go, these are promotes. They're not real companies. But that doesn't matter, right? This is 2020. We're going into 2021. Markets are hot. Like, would you rather sit on something, if you're an active retail investor, sit on something that can't move, or sit on something where you can actually, and you can do it in this marketplace, go get 100-200% return over a short period of time. If you could time these things right and you know what you're doing, look, Jim will tell you probably he's a pretty humble guy that those aren't always in his back pocket. But if you could find those given the right characteristics as a trade, I think that those are worth exploring as well.
Absolutely. So on top of Jim's pieces, I think I'll be compiling something on a recent credit facility that Aurora Cannabis filed on Christmas Eve. Something that I find super interesting and others might not even give a shit about, which is fine. Aside from that, any second now, we've got our daily dive going out with Michael Den. He's talking junior mining, highly experienced with what he does. He's now the CEO of, is it Temis
Resources. He's also CEO of United Lithium Battery Metals, which has had he got hired 2 days after they ran this really bizarre German promote on a tight share structure, and it just kind of the stock went from pennies to $3 and all the way back down. But he's a guy who he knows his rock, as they say. He knows his he knows his lithium, knows his gold particularly. That's why he's a really close friend and a guy who I really like to lean on as we enter what I think is going to be a commodity super cycle. And Temis, I don't know exactly what's going on there, but I think Michael's due for a big win as a CEO of a publicly traded company.
Yeah, they've got Quebec properties. I know Michael is primarily experienced in gold in the Red Lake area, but I believe he's also got experience with some of the lesser known metals like vanadium and stuff like that, lithium. They've got Quebec properties, and for the life of me, I can't recall what specifically they're after there, but I'm sure it's something interesting if Michael's behind it.
Yep. Okay. Well, I appreciate everybody taking the time to join us today. It blows my mind that I get to do this for a living. I get to talk about small cap stocks for a living. I picked the name SmallCapSteve over 12 years ago on Twitter. Just decided that I would just, talk about micro caps, nano caps, small caps, something that I'm really passionate about. I've been really fortunate in the last year to get to become friends with Jay and get to do this for a living. And the fact that I now have companies who pay us to write about them on our platform, or I've made enough money as an investor that I get to do this full time, is something that I'm really grateful for. And I hope that we can start to talk about some of our experiences, evaluate these things in real time, and provide real value to our audience on a go-forward basis as we head into 2021. Jordan and I made a commitment when we started this. We're going to do 100 episodes, regardless of how good or bad it goes. So far, I'm happy with the turnout. I'm just so grateful that so many of you who could have spent your time doing anything, staring at any screen, are choosing to spend your time with us. I hope we can provide lots of value for you guys as you guys navigate this small cap and micro cap world going into the new year. And always feel free to reach out to us if you have any questions or topic matter that you want us to talk about. All right. Thanks, guys.